Okay, let's also chat with the management then of Speciality Restaurants. Rajesh Mota, CFO of the company, joins in. Rajesh, hi, morning. First, if you could talk a little bit about what's been the growth in your business that you've seen in the last 2 months, considering footfalls are now rising in few of your restaurants wherein you have undertaken or, started food festivals which are currently undergoing.
Very good morning. Yeah, we have been seeing an upward trend basically because what has happened in case of food festivals, when you talk in terms of O Calcutta brand of ours, we have O Hilsa Festival which is on. And especially in mainland China, what we have done is we have introduced a new menu basically to get the footfalls back, which has given us an uptrend in last 2 months from the specialty restaurants, like from June, July, August had been a very good month till this time. And since we are entering into season now, beyond September, October, things look optimistic.
And which restaurant exactly is contributing, the maximum to your EBITDA currently?
You would look forward for brand or restaurant per se?
Restaurant.
Say there are few restaurants like mainland China in Calcutta, South City. We have mainland China in Andheri West, Mumbai, mainland China, Chennai, mainland China again in Bombay, Powai. They are some highest contributor restaurants for the company.
If I look at your quarterly performance, what you've reported for the quarter gone by, Rajesh, margins were not all that strong. Revenue was looking sluggish. Why is that?
See, what happens is quarter one generally for our restaurant had been slightly subdued with respect to the other quarters primarily, number one. Number two, what had happened in quarter third and quarter fourth of the last financial year, we had opened 5 new restaurants which attained scalability a bit later than expected. So which are now started contributing, and Q2, which is being considered to be a very good quarter now vis-a-vis the last year. And going forward, Q3, Q4 seems to be much better.
Well, talking about food business early morning, Mr. Mota, is very appetizing. But what worries me is the feelers which I'm getting from your peers. If I look at the management commentary which has come from McDonald's or Jubilant Foodworks, all of them are indicating that Indian consumer is either getting exhausted or is now saving more.
See, as far as our business with respect to fine dining is concerned, is more concentrated on weekends, primarily Friday, Saturday, Sunday. And during these 3 days, we have not been finding any kind of a drop primarily. But yes, Monday to Thursdays are few slack days, wherein good amount of efforts are being taken by the company to improve upon, to get back corporate customers, number one. Number two, we have started certain offers by the way of Dine by 9, wherein we want people to come early, settle their check by before 9:30, and offer them 25% off.
Mr. Mota, what about the new outlets? How many are you targeting in FY13?
See, as far as target is concerned, we wish to open 16 restaurants in this fiscal of FY13, out of which 4 we had already opened in quarter one. 1 we have opened during last 1 month. Basically, these are own company operated and company owned restaurants. Beyond this, there would be few restaurants which are run by franchisee, when we call as a FOCO model. There also we have opened 3 restaurants in this quarter.
Right. And how have the rental costs panned out in the last 6 months?
See, as far as last 6 months is concerned, because what happens is we enter into agreements prior to that. But yes, because of the brand pull, we are able to reduce our rental costs over a period of time. Last 2 years agreements which we have entered into are more on revenue share. And now we don't look forward for any restaurants where we find that the rentals would be more than 15% of the targeted revenue. We peg that at 15%. Agreements are being entered into at 10, 11, 12, which 3 years or 4 years back were at 18 or 20%.
Right. And what about the total capex that you've planned for FY13 to 14? Would you also be requiring any further fundraising? And if so, what is the plan like?
See, as far as capex plan is concerned and raising of fund is there, we have already raised money from IPO to the extent of 176 crores, for which objects are very clear. We had objects of opening 16 restaurants in fiscal 13, 16 in fiscal 14 and 13 in fiscal 15. So we are on track. As far as FY13 is concerned, we don't look forward for raising any kind of money till the time we have IPO money to exhaust on.
And what is the current, usage of your IPO proceeds? When I say usage, how much of the IPO funds has been utilized? How much cash are you still sitting on?
See, we are sitting with 153 crores of rupees as far as total cash is concerned, which includes around 8 crores of our own treasury fund basically. And we have, let's say, repaid 9 odd crores of term loans which we had out of the total debt of 26 crores which we have repaid. The company has become debt free. And there is restaurants which are already on. We have opened 5 restaurants for which the spending is continuing. And we intend to utilize around 50 to 60 odd crores in this fiscal.
You also had plans to set up a food court in Kolkata. Update us on that, please.
Actually, that's not a food court. It's basically a food plaza wherein we have 1 acre of land in Rajaraut, New Town, Kolkata. The plan is to take all our restaurants there with banqueting and service apartment facility. Since we had the land, we had planned for getting into that food plaza. But at this point of time, major activity has not started. We are working on the drawings, etc., trying to take approvals. And post that, we propose for going ahead with that.
So in terms of in directional, for next 6 months, what are we likely to hear from you more? Squeeze in margins and sluggish top line, or expansion in margins and a slow jump in top line?
See, to be very honest with you, I presume going forward, since we are getting into our season mode, which have been practically better quarters for us, we look forward for a growth. I would not say sluggish at this point.
In terms of your total brand contribution, could you give us an indication that how much is coming from mainland China, which is your flagship brand, and what is coming from your other flagship brands? And are there any core brands which you are planning to divest?
The mainland China contributes around 62% of our total turnover on top line basically, with other brands like O Calcutta would be contributing around 10%, Sigri, Machan and Flamingill, which are basically the Indian cuisine brand, contributes around 17 to 18% of the total revenues. Coming to the question of your combo brands, yes, we have certain premises and locations where we plan to have a mainland China flagship store. Along with that, we would like to have Sigri store together to have economies of scale there, and which would definitely trigger into improvement in the bottom line.
Okay, good to have you on the show, and appreciate really, Rajesh, that you took the time out and joined us here in our studios. Let's bring up the stock price then of Speciality restaurants, currently going good by about almost 4% after a quiet start.